Okay, good morning, good afternoon, good evening, everyone, and thank you for joining us for the next edition of the Bridgewise live webinar. Our topic today is cracking the retail code, engaging today's investors. We're going to be delving into lots of different strategies and insights into how to acquire and retain and engage with an increasingly sophisticated retail investor. My name's Adedamola Aditola. I am the general manager for Bridgewise in Europe and Africa, based out of London. If you're not familiar with Bridgewise, we're an AI global investment intelligence platform. Our mission is about democratizing access to institutional grade research, both to retail investors as well as to institutional investors. There are three main use cases that we solve to. We work with exchanges in terms of helping them to provide more visibility and thus liquidity to their issuers. We work with capital market players both on the sell side and the buy side, but our largest and fastest growing segment of our client base is engaging with retail platforms and helping them to service their clients. We provide research and recommendations on up to 36,000 publicly listed companies globally. So that's probably about 90% of the publicly traded companies in over 12 languages. So 72% of our reports are read in a language outside of English. So we're all about delivering this access both to institutions, but especially to retail end users. I think everyone on this call will accept that technology is an enabler. There are probably ethical considerations around social media and things like that. We won't get into that today, but technology has enabled all our lives. We have massive computers in our mobile phones. We have services that we can get better and quicker. And when we look at the topic we're talking about today, retail investors, retail platforms has changed significantly from a technology perspective. So we're going to be talking a little bit about how technology has been an enabler and how it's able to deliver service to an increasingly sophisticated client. Today, we're super excited to be joined by two prominent leaders in this field. We've got David Siegel, who's a former CEO of Investopedia and president of Seeking Alpha. If you're familiar with these companies, feel free to add in the chat. We'll be able to pick that up later. David's got something to talk about. It's a suspense even to me, so looking forward to hearing about that. And we're joined also by Stuart Fieldhouse, who's a friend of the firm. He's editor of Armchair Trader. They both have extensive experience in engaging with retail platforms, and not just platforms, but the retail community as a whole. So we're looking forward to their insights and comments as we get into it. I've given you a bit of an intro, gentlemen, but probably tell us a little bit more about yourselves, and then we can get into it. David, do you want to go first?
Okay, sure. So great to meet you all. I'm here in New York. Though I spend quite a lot of time in Israel. Two of my three children live there, so I'm actually heading there next week as well, over the Thanksgiving week. I started off my career as an early employee of a very interesting tech company in the internet days called DoubleClick, which was ultimately acquired by Google for a few $1 billion, leader in ad tech. Ultimately moved up to, after a number of different stints and places, to, as was mentioned, president of Seeking Alpha, CEO of Investopedia. And after that, I sold Investopedia. I became the CEO of a company called Meetup. Meetup has about 80 million users, and is the world's largest platform for a community. We don't necessarily need to talk about that at all because it's less relevant. And then I sold Meetup about 9 months ago to a company called Bending Spoons. And I'm taking some time and working with different amazing companies like Bridgewise, and looking forward to this conversation.
Thanks for joining us. Appreciate it. Over to you, Stuart.
Yeah, I'm based in London. I was started my career as a wealth management journalist with Financial Times, and I was there when they launched FT.com, and indeed before they launched FT.com. So I had some experience of the teething problems of that launch, but also probably of relevance, I was at CMC Markets, which people in Europe and UK are probably familiar with as an FX broker and CFD broker, and I was part of the project team that relaunched their spread betting and CFD trading platforms. So got a lot of experience from the broker side of the market. And then more recently, I've been editing the Armchair Trader, which is a daily news site for active investors, primarily UK, but also quite a few international subscribers as well. So we have a small team covering a wide variety of financial markets, and a lot of the focus is on those areas of the market that are possibly not getting sufficient love from the traditional media space.
Excellent. Thank you. Thank you. Super well qualified for our chat today. Okay, so let's lead off the conversation with a bit of background, a bit of context. How do you think the philosophy of the investors changed over the last, say, 10, 20 years, and then more recently over the last kind of 4 or 5 years, post-pandemic, during the pandemic? I think 20 years ago, retail investors receiving live prices and being able to trade on them would be considered like revolutionary. That's pretty standard. So, do you maybe just talk to that, David, and we can take it from there?
Sure. So in the past, everything was just kind of static content. At Investopedia, it was really just a lot of kind of evergreen type content that was not real time, and everything has changed just dramatically. Everything is now about real time. Everything is about having incredibly relevant data. And it's not just about content, it's about data and analysis. But the thing that's important is not just the content, it's not just the data, but it's the ability to really focus on action. Investors today don't just want to have insights; they really want to move forward towards recommendations, and what specific actions make sense to take. Another trend that I've also been seeing in terms of the evolution is around greater insight around crowdsourced type information, of getting wisdom of the crowds and feedback from a large group of people, whether it's through Reddit or whether it's through companies like StockTwits, which is a really interesting platform for understanding wisdom of the crowds. And ultimately, that's where I'm seeing a lot of the trends. Last trend I'll just talk about is really around personalization. Mm-hmm. I have seen a dramatic difference in terms of how web companies interact with customers, and apps and newsletters interact with customers, where it's almost like an entirely different experience depending on who the receiver is, because we have so much more data and information about people, both behaviorally and also in terms of registration data that they share.
Very interesting. Yeah, that's right. So that I'm just picking you up on that point around personalization. Can you talk a little bit to that? How increasingly the profile of the end user is so important in the content that's delivered to them?
Yeah, I love that question. Okay, so when it comes to personalization, there's two types of data that many companies like Investopedia are seeking out for, or potential Bridgewise or StockTwits, any of these big platforms, Yahoo, tend to use. There's registration data, which means when you enter the site or the app, you provide information. I'm interested in long, short. I'm interested in M&A opportunities. I'm interested in certain market cap sizes. You provide information, the types of information that you're most interested in, bonds, stocks, whatever. And then there's also behavioral data. Behavioral data is actually what you're doing on the site, what you're doing on the app to personalize what you would be interested in. A lot of studies have been done on this in terms of what you should use for personalization, whether you should use registration-based data or behavioral data. Every single one has found that behavioral data is far more valuable than registration data. There's been a real evolution there, because in the past, a lot of sites leverage the data that you provided, but what we found is that people might say, "Oh, I'm really only interested in small cap stocks," or whatever the thing might be. But then when they're on the platform, whether Bridgewise or a different platform, all their time is being spent looking at cryptocurrency or Bitcoin or whatever the thing is. So from a personalization standpoint, don't give people what they asked for. Give people what they're actually spending their time doing, and that's a lot more valuable than just registration data.
I like that. Give people what they're spending their time doing rather than what they think they want. Stuart, can you talk a bit to that? How the philosophy of the trade has changed? Maybe, as some, you get all these maybe younger people who feel like a 10% return a month is not great. Like, how do you feel the philosophy's changed, crypto trading and high frequency trading, etc.?
I think there are a lot more people in the market, so to speak, now than there were even, say, 10 to 15 years ago. I think we saw a real surge during the lockdown, during the pandemic. A lot of people suddenly started opening trading accounts at that point, and I think a big proportion of them have stuck around. So they began trading the meme stocks, and now, certainly from our perspective, we're seeing them continuing to be active in the market. A lot of people came in, as David's already mentioned, crypto's been a big factor in attracting people into the market. And a lot of those crypto guys, we're now starting to see them trading other assets as well. I think, certainly in my career, I think the thing that's really changed is you're now seeing a market where there are so many tools and so much data